Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, September 22nd, 2016. So the Bulls, they did pick up where they left off yesterday, off at a fake surprise Fed announcement. But in any case, they moved up and that's fine. You know, as long as we weren't caught on the short side, and nobody should have, because when we were, you know, trading at these levels here, I had my neutral hat on for a really long time, and I wasn't pressing the long side or the short side, because I said we had a 50-50 chance of going up or down, and just sit and let the dust settle. And once it makes a break, that's when we start evaluating where to take a position as far as direction. So in the morning notes, I said if they got through the 2074 level, that there was going to be a reaction trade that would most likely take the S&P somewhere between the 2180 and the 2183. So it made it right up to the 2080, and I'd said, I was going to look for a possibility of taking a short position if I was seeing sell signals. So this is a 5-minute chart, and you can see we did have a little bit of a sell signal. And what I had put in the trading room, and I didn't get this out, I'm really trying to stay away from putting out trades that I'm not going to be in, like where they're not a direction trade. But what I had put out was that I took a short position when we were right in this area here, using the Spiders puts, and I said I'm just putting a stop at 2182. And if they took it out, I'm going to lose a couple $100. If they don't, then I was anticipating that it could come down to the 2170, where I was going to take some off and then just hold it to see if they're going to come close to closing this gap. They didn't get there. Towards the end of the day, we saw some panic buying, but I'm still in my my trade right now. And like I said, if I get stopped out, I get stopped out. It's not a big trade. My stop is really tight, and if it works, then I'm anticipating that we're going to see the S&P consolidate someplace down into the anywhere between the 2165 and the 2155. So it wouldn't be a bad trade from up here. Now, if we do get that type of environment where we come down, let's take a look at the 15-minute chart, and you can see this little stick right here actually was the divergence on it. It's not huge, because it was right here. You can see through the oscillator and everything turning, but right now it does look like it's consolidating, so maybe it does pop up. And the one thing that you have to remember, and what I've said, it was 100% trade, is that this gap was going to get filled. Now, what I also said was that I was hoping that this was just going to be a small counter trend bounce, and we would head down. And what that would do is give us just a better buying opportunity for that trade to come up and close the gap. Obviously, the market really doesn't care what I want, and it ended up going up. So it was, no harm, no foul, because I wasn't shorting the market, but it would have been nice to be long for here. But the thing is that we didn't close this gap yet, so this trade is still on the table right now. And so if we head down, I'm not sure that this is going to be, that this is the top right now. And what I'd really like to see is a push down into this area, close this gap, and find support at this moving average, and come back up again and make that double top type thing, or go a little bit higher than it, close this gap, maybe even get up to the 2182 level. And then from there, that's where we're going to start seeing some real sell signals with the S&P. That would, we'll see them on the 60-minute chart, we'll see them on the 15-minute chart, and that's where I would feel more comfortable saying, I'm willing to take a short position in this area and simply just use, a previous high as a stop. And if we start breaking through these levels, then you know what, the whole decline may be done, and we just switch hats and go to the long side. I'm not, like I said, I'm not really looking to take sides. I mean, the one thing is that I'd be cautious on the long side for, the main reason is, when we look at a daily chart, and if we go back to previous times that we've seen big snapback rallies, but we didn't see the actual technicals get into oversold levels, what has happened is these snapback rallies, even if they made a new high, it ended up giving back a majority of the move. And, if you see here, we had the big drop here. But what happened was we actually had bullish divergences here, and we were very, very oversold. And from that was, giving you the, the clue not to short, because it could last. Now, when we go to this one right here, here's another example of it where we had a big rush up. That now what happens is we had a pullback here, never made it to the, down into the oversold levels, popped back up again, and this failed. And then from there, we actually came right back down again. So, and this was the Brexit. But this is actually, it's not safe for the main reason that, there's some serious bearish divergences in place. This pattern is bearish, and I'm telling you, you're probably going to see this popping up a lot because they're going to be using it as a 25, 30, 25, depending on when it gets to the top of it. But this is going to be their price target and what's going to be holding the bulls in. And maybe it does play out that way. This pattern looks, like it could be in play. I just think that a lot of people are going to be looking at this, and with the bearish divergences, maybe it gets up there, or maybe it just comes up and does that little double top like I was talking about, and then traps a lot of people and takes it out and comes down to the 2050 area. But I'm not really comfortable on the long side yet, mainly because of this. But I'm definitely going to pick and choose where I'm going to short. And when I do short, I am going to put stops, just like I did today, right above the previous highs. And it may take me a couple tries to actually, get one that works. But if I'm only losing a little bit here and there, it's not that big a deal, because most likely when it does work, it's going to have a 20 or 30 point drop. So that's, that's really my thinking on this. And I don't want to get caught short if we're coming all the way up to these levels, or especially if this, this pattern is in play. I want to see the way things play out. So that's really about all I have for tonight. I'm definitely getting a little more bearish, but I want to you want to see the breakdown. And when I say bearish, I'm not looking for a complete fall apart. I'm looking for a test of these areas here, or possibly even down to the 2145 level, to test the moving average on it. But I'm not looking for any type of crash or anything. I think that was this move here. It happened. Maybe there's more to come. We'll have to wait and see. But for now, I'm neutral but bearish, and what that means is I'm probably going to be pretty quick with my trades, and I'm not looking for home runs. And when we start hitting any type of support areas, I'm just going to cover and just wait for the next setup. So with that, have a great night, and I will talk to you guys in the morning.